Episode 44. Another roundtable. What's the state of the trenches, Onur?
Small round table today.
Yeah,
Um,
very round.
I I don't. It's like a line. I don't know. I have been focused building this government contract aggregator mostly, and also working on some other things. So I've been heads down building my my entropic limits are maxed out both for Opus and the Sonnet model, which is wild because Opus limits are kind of like low, but the other models are. I never ran into issues there, but yeah, that's a first for me. No, otherwise, jokes aside, I just realized it's much more peaceful building and not be distracted by all this price stuff. Like as euphoric and as like dopamine induced the cycle can get, it's so distracting. And then like, whenever something goes up, it will come down again. So I feel like yeah, it's much more peaceful just building something heads down.
How specifically have things changed for you, though? Are you did you exit your positions, or are you just not touching it? So
I'm an
not
eternal
wasting mind
holder.
share on it.
I'm an eternal holder. I'll just hold everything forever. And if one or two bets do well, which I think they will, it makes my position, it makes my portfolio. And yeah, I don't really touch much. I mean, especially in now in the era with like LLMs trading, I'm like, who am I to trade? Like, I don't have an edge, I don't have an insight, I don't have any like particular infrastructure. My setup is very basic, so I'd rather just like hold my positions that I have conviction in.
On the note of AI trading, let's take a brief look at the N of 1
Yeah,
competition. Let me pull it up really quick.
please.
Looking better than I expected, especially DeepSeek 2x its portfolio. I thought I saw a chart where a few days ago they were all down pretty bad, but
Yeah.
maybe that was just like
No,
an
no,
altered chart.
no. They were. So, do you see the around October 23, the local high around like 15K or something? The local high. Yes. No. One more.
This one?
No, no. Oh yeah. Actually, yeah. It was this one. I think it could be this one. So after this one, it went like all of them went pretty down to principal, essentially. So they were down like 50%, despite having been up 50% before. And from there, it's been up only.
What is Quen Free Max? Whose model is that?
I don't know. I don't think it's a Western model. I think it's an Eastern model as well. But I mean, DeepSeek is obviously China. And DeepSeek, I know, was developed by Quants. So if there's some correlation there, it's not surprising. But yeah, I'm surprised. Like, I'm quite surprised how bad Gemini is doing. And you know what's funny? It's like the LLMs that do the worst trade the most. I think the ones that do well, they have quite few positions. No, but like this is fascinating stuff to me. So,
yeah, Gemini has by far the most trades.
Yeah, and you can see like the best performing has the fewest trades. So it's not surprising. I think like the wisdom. I don't even know how the wisdom goes in English. I only know the saying in German. But like, the more you trade, the worse it will be for your portfolio. And just like DCA into conviction bags, and I guess TP, take profit when things are up a lot. But jokes aside, so my dream is I just want to have a model that has proven success to manage some percentage of my portfolio, right? So I would be comfortable having 30% of my portfolio in stables, generating stable yield, having 30% in something like this, trading and just like trying to outperform the market, and having another 30% in higher risk assets, mainly like BTC, ETH, Solana majors, just like longer term positions. That's like my dream portfolio. And I think like this is also interesting. Like if I mean, I wonder how sustainable it is in the sense of like if everyone uses it, it should be a zero sum game. But I remember when ETFs were hyped.
No, everybody's gonna get rich. Everybody's gonna make money.
So here's the thing. And I know we discussed this. So although the assets these LLMs are managing are quite active, so they're having like quite active portfolios, from my perspective, it's passive capital deployment in the sense of like, I don't make a meritocratic decision. I just let this thing deploy capital into the markets. And I feel like there's a risk where if a lot of people do that, things will get bloated fairly quickly. I don't know how that will end, but I think we're so early to this that there's going to be a crazy LLM trading run that we haven't even like considered yet. And I think like, yeah, you're right. Like I think this will make everyone rich for a while.
Well, a few comments on that. I think first of all, I would never ever consider this a passive investment. I mean, by that logic, you'd have to consider any investment in any actively managed fund passive as well, because you're not doing it, but somebody else is doing it.
ETFs are considered passive capital flow.
Yeah, but ETFs are not like managed in a discretionary way. They are like,
right.
They are supposed to reflect some sort of like weighted composition of individual assets.
You're right.
In one, so like there's no active intervention. I think that these AI managed portfolios even take it a step further, because you cannot, I'm not sure about it, but I think you cannot 100% in retrospect reason why the model acted as it did. Whereas
no, you can.
humans,
this is the beautiful thing about this. If you go to the live view again, and then you click on the model check, yeah, you actually see, for example, how they're communicating and what prompts they're fed. So if you click on one of these, yeah, exactly, just click on one of them. Yeah, you see the user prompt, at least like part of it. So it's being fed data, and then I think it's truncated, so like we don't see the full history. And based on the data, you see the reasoning models reasoning. And if you go down, like you see all the data it's been fed, and here you see the chain of thought, what it's doing, what it's kind of like reasoning about, how it's doing that. So I feel this is quite transparent, actually. I mean, it's not kind of like presented in a user-friendly way yet, but the data is all there.
I agree that you can see all the inputs, but can we, I mean, this may be getting a little bit too philosophical now, but essentially, if we are only seeing the inputs, but we can only assume which inputs led to what output by the model, for us to reason about it in a similar manner or in the same manner as we would do with human fund managers, would that imply a sentient AI? I don't know if that makes sense.
I mean, yeah, I understand your question, but this is generally with, so we understand very well how LLMs are created. We understand the process of creating them. We understand the process of like processing large amounts of data and training these data sets and tuning certain weights and parameters. That we understand well. What we don't understand well is why exactly certain predictions are made by the LLM. I mean, essentially, you can think of LLMs as predicting the next character based on your prompt. So it's kind of like taking your prompt, decomposing it, and based on your input, it just predicts based on its data and model and training and weights and parameters. It just predicts which one is the most likely thing to output, right? So it's definitely not sentient at all. It's super simple. Super simple, quote unquote, math. But we actually do not understand fully why the predictions and the distribution, because you can think of it this way. If you ask, what is the yellow object in the sky? It's like a prediction that it has, where it says 80% sun, 10% star, 5% something else maybe. And then it says sun is the most likely, so it says sun, right? So we know how these things work, but we don't know why sun has 80% and star has 10%, for example. We don't understand why the output is exactly how it is. That is pretty much a black box. And that being a black box, I don't think has anything to do with it being sentient, to be honest with you. I mean, that's obviously the kind of philosophical romanticized view. I think it's just a mathematical model, honestly.
Yeah, the sort of scary part, or at least what would scare me away from investing or trusting something like that to a similar extent as I would maybe with a human manager, is that yes, you can reason more about the inputs, but sometimes with humans, if you debate a topic and they either end up making a similar or a completely opposite decision based on that, there's more of a interconnectedness between human minds, or even with gut feeling, where you kind of see the stagnating point, or the flipping point where the human makes the decision and why the human makes the decision. You're able to pinpoint what specific argument, what specific emotional trigger made the decision flip this or that way. And yeah, this is still a little abstract on the side of AI. On the note of everybody getting rich, I mean, to a similar manner, we have this with the S&P and many of the index funds. The main, I think we discussed that once in one of the past episodes. The main reason why the S&P is up only, it is not because of the insane quality of all the companies there. It is because there is an infinite structural bid. Everybody is bidding the S&P.
I mean, that's exactly what I was referring to with a passive capital stream through, for example, ETFs into the markets. People don't make informed, distinguished decisions on which companies' balance sheets or whatever. It's just let me just invest into the market. I know this thing outperforms historically. And I feel like this will accelerate that a lot, because one, the markets it invests in are much lower liquidity. So smallest changes in capital deployment here will make massive impact. I'm with you. And by the way, I agree with everything that you said before. But I wanted to add that even if you invest into a human fund manager, the first thing you would do is you would look at past performance. That's probably the number one. There's two things that are interesting, right? One is what's the general thesis and direction of the fund? Is it utilities? Is it everything but utilities? Is it emerging markets? Is it precious metals? I don't know. And then the other thing is what's been the performance of this fund over the last couple of years, right? So what else do you look at? You don't get to drink a beer with the fund manager. Most people don't even have access to that. Very few people, I think, have access to that. So I don't know how important the human connection there would be. But here I feel like it's exactly the same. I would just look at this and I would say, okay, it seems to me that DeepSeek is doing well. I will observe it a bit more. And obviously, at the risk that I'm top blasting, I would probably still start to build a position as, it's going to be interesting, though, as the LLMs release updates. And I honestly think it's going to be a crazy bidding war here. I think this will become part of this will probably shape the direction and form of how new LLM models are being created. And I think that people will definitely want to optimize for this.
I think to judge that we would have to know what sort of percentage or absolute value results from directionally trading assets compared to the other applications of AI. Like, of course, there will be LLMs developed specifically for use cases like this, but I'm somewhat skeptical whether it will significantly shape the innovation and development of like these very mainstream agents. Like, I don't think that this is going to significantly impact the development of like GPT-6 or GPT-7 or whatever.
But maybe there is a GPT-7 finance model. I'm pretty sure that will happen. I'm pretty sure we will see, like in the ChatGPT world. Obviously, there's only like one model, but if you dive deep into the LLMs, there are specific models for poetry. There's specific models for math. There's specific models for coding. There's specific models for all sorts of things. There's specific models for visual things, and I feel like there are specific models for financial applications, and that will, in my opinion, become more and more prominent. Like the number one thing. So I have like this hierarchy of like, when does something matter? And it's basically, there's only three things that matter. The first thing is life. Is your life at stake? If that's up to discussion, you will care about it and you will do everything that it takes. The second thing is freedom. Is it like, is your freedom at risk? Will you go to prison? Will you go to jail? Is there something legal? You will do almost everything in your hand. And the only other thing that matters is money. Like, can you make money? Is there money to be made here? And I feel like that's literally like the only things that matter. Everything else is a nice to have. Obviously exaggerating, but that's been my experience, especially with like companies and products. Like, people will care a lot about the first three. They'll care much less about anything afterwards.
On the company level, yes, but I think that if we think the AI-driven economy a few steps further, most of these functions in life will get increasingly automated, and I think humans will be forced to reflect a bit on the immaterial layers of life more. And I think overall that's a positive development.
I agree with that.
Just one more side comment, because you mentioned you're concerned that you might buy the top of these AI agents. In theory, if it is just based on probability, so it's basically like throwing dice every single time. It's like a roulette or something. There shouldn't be a directional top. Like, if unless the underlying strategy of a model changes, it should perform. It should be randomly distributed. Like, there shouldn't be like a FOMO driven top or like a sentimentally driven top, as we have seen in crypto in the past when regarding the performance, because inherently they shouldn't be biased to the long or short side of any of the assets
They aren't.
they're trading.
Yeah, no, I agree.
Yeah, I was shortly when they all dipped down below their initial. Then I was thinking, because that was when we all dipped. I think a few days before the weekend, like Thursday, Friday last week. I thought like, well, I mean, I didn't follow it along that closely as you did, but I was thinking, well, nice attempt, but it seems like they're all just directionally biased to the long side, like everybody.
So by the way,
certainly that is not the case. So
these assets are traded on leverage on Hyperliquid, and they have quite aggressive leverages. And you can also check the wallets. So technically, even today, you can copy trade DeepSeek, and I'm pretty sure people are already copy trading these models. I'm 100% sure. And it's just the wallet address. You just have to follow and copy trade a wallet address. Like, that functionality exists already in the market. But you know what? Like,
one interesting thing to note is that they all have a win rate below 50%.
Why is that interesting?
Well, because I think when humans trade, they are overly focused on win rate, and they get quickly frustrated if they have a win rate of below 50%.
Yep.
And many struggle to deal with the fact that usually in trading or like in any other game in life, that you have to optimize for outsized returns and just like keep your losses at a limit and then it's fine if you lose most of the bets that you're taking. Not only in trading, but like in every field of life. I think especially if you look at a rather risk averse culture as the one in Germany, I think many people do not get it. I think on the side of the AI agents, it would be interesting to know if they have any strict risk management in place. Like, how would these things perform if we see another liquidation cascade as we've seen on October 10th?
But this is the thing. So I have two main comments. And by the way, I find this project extremely interesting. I think it is worth diving into this. One is like, obviously there's going to be a short period of time of arbitrage one way or the other getting into this. Like in 10 years, if everything is traded by AI, I think the cuts will be made and people are just like, people will have some exposure one way or the other, but like it's not going to be thousands of multiples of return. So I think getting into this now is probably where the spicy action happens, as always. And you have to take into account the risk, but that's the game. High risk, high reward. But then the second thing, what you just said, what did you just say again? Okay, win rate. Okay, exactly. So I think like these things are just good cutting losses. Like humans are, I mean, again, I don't want to generalize. I think good traders aren't, but like most human traders are probably attached to their assets and become backholders when they're down a lot. And you should probably be rigorous with like, hey, like if I have a position and it's up, whatever price it is at 10% down from there, I'll just cut the losses. I'll just like exit the position, and then I'll make a reconsideration bet when I have like new information presented. But the last thing, which I find extremely interesting, is, I mean, obviously, the biggest difference in the world is based on what data you feed it, what you prompt it to do and to reason about, and how you structure your prompts and your data, right? So I actually think that will make all the difference in the world, and that in itself will be a quant-like discipline. So my assumption is that call it prompt engineering, call it whatever you want to call it, but like some sort of like prompt engineering for these models will make crazy differences in the return and in the win rate. Right now it's just like they all do the same, which is nice for comparison, honestly. But maybe like Grok will perform much better than any of these models if the prompt engineering is different, just because Grok has been designed and architected in a different way, right? So I feel like there's so much design space to explore there. It's super fascinating.
Yeah, I think that's definitely a niche we should keep an eye on. I think one thing that would be very nice if they had vaults on Hyperliquid where you could deposit capital into the underlying strategies of these.
Go to life again. And then if you go to positions, go to, I don't know, view on do DeepSeek though.
Let's take the BTC one.
No, maybe it's in the README. I don't know, but like the addresses are public of these models. Maybe it's in completed trades potentially. So you should be able to see what address has done the trade. I mean, the addresses are definitely public, that's for sure. So it's not a vault, but it's pretty much, you can just take the address and copy trade the thing.
I thought it would. Oh yeah, link to wallet.
Whatever you're clicking, I don't see. Yeah, okay. There you clicked it. Yeah, okay, perfect.
Interesting. Yeah, so we should keep monitoring that. It's.
I agree.
Maybe when I'll have some of the vault people like in the broader vault ecosystem on the pod later this week. I'll ask them whether they would ever consider to implement LLM driven strategies in their curation.
No, that's not even like, why is that even a question? It's like,
do you think 99% of all large holders are super averse to AI making any sort of decision when it comes to actual position management and execution. Most people are completely opposed to that.
I would say only up to the point where you can't avoid and ignore it anymore because it's been outperforming everything. So my question is, or my point is basically, will there be 1% of people who will outperform LLMs? Yes. Are you one of those people? I don't know. I'm definitely not. So for me, it's a no-brainer to size into LLM managed vaults and just DCA in, and I will outperform 99% of the people. I will not outperform the 1% of the best traders, but I'm also not outperforming them today. But you know what I mean?
So the performance to the upside variable is like not irrelevant, but it's of lower importance. I think what people are concerned about are tail risks, because the decision-making process and like the causal chain between inputs and the decision that is made, there is still a black box element to that.
But it's like, I mean, how is it more black box than any fund? You know what I mean? Like, I understand.
Because funds are legally liable to certain things, and they have objective risk metrics in place. Of course, funds get blown up all the time, but like if there's a difference between just using, let's say, a bot or like any like automated algorithm to rebalance between spot lending positions on Fluid, Euler, Aave, and Morpho, but letting these things directionally trade for you without knowing if they have any 100% loyal adherence to whatever risk metric that you give them, like that is a huge tail risk. Like you would never want to do that unless you can be 100% certain that this doesn't happen.
You can never be 100% certain. There's no such thing. It's like the reason why crypto exists is because of banks. The reason why crypto exists is because of banks. I don't care how regulated they are. The way they operate, the way they handle money is just, that's exactly the reason why crypto and Bitcoin was invented, right? So if you're in crypto, I think you don't care which certificate is behind a fund, or how credible a bank is. Obviously you do to some extent, but it's like you trust code and algorithms more than that. And I feel like, yes, of course, the LLMs itself, there's some black box notion to it with regards to how the inputs lead to outputs, but at least like inputs and outputs are pretty clear. And that to me is much, and like the ledger is transparent, the inputs are transparent, the reasoning steps of the model are transparent, the output traits are transparent. I mean, that's much more transparent than any bank or fund thing provides. I mean, maybe legally you're eligible to receive all those information from funds, but who's doing that if they invest into a managed fund? I don't know. Like, I'm not deep into that, so I really don't know. But to me, this is much more accessible to people.
The point of comparison I was trying to make was not with a bank like giving under collateralized loan to real estate speculators or whatever. It was more compared to, I have a vault curated by, let's say, MEV Capital or RE7, which is an automated rebalancing between certain lending protocols, which has objectively specified risk parameters. Like the permissions of the vault are objectified in code. There is no discretionary decision maker behind it who can like circumvent these permissions. It's all on chain. And here you have a black box that is taking directional trades on your behalf. Like these things are apples and oranges. You cannot compare the risk profile of these. And I think it's going to take a very long time. And we need to be able to 100% verify and prove that we are able to cage these models within certain risk parameters before we will see any type of mainstream adoption of that.
We could get into the discussion of this, and you may be right, but I guarantee you this is exactly what people said about Bitcoin in 2010. People that were serious about investing and financial markets were saying exactly something along the lines of what you were just saying about this. Yes, there are gazillion risks. Yes, nothing is proven. Yes, who knows if this will work. That's not the point. The point is like, are you willing to take a risk, and are you risk on with this, or will you observe and will look for certain metrics or lights that give this more credibility, or scope this in a, like it's described, like scope this in a more controlled way, such that the decisions are not made arbitrarily by a black box, but maybe they're scoped alongside some parameters that I feel more comfortable with. I honestly, like, personally, I don't care about any of that. For me, it's like, do I think a reasoning model is better at making financial decisions than myself? Yes. Do I think I'm early to this? Yes. Do I think this will outperform 99% of the traders? Yes. I'm in. That's really like, I try to left curve it. I just try to left curve it. I'm like, this will 100% work. Like, I don't see any reason why this will not work. And if I'm wrong, I take the loss.
I really think
I don't even know.
Listed as hyperliquid vaults. I think that would be quite interesting.
I don't even know how to get exposure to this other than copy trading it. So I think like there is a ton of opportunity, whether it's like creating vaults for specific models. First of all, like, there's already copycats of this, right? And I think there will be more and more copycats. And at some point, the copycats, like the lifts of the Uber or whatever you want to call it, they will also be successful. So I really think there's a ton of business opportunity here. We don't talk about management fees yet. We don't talk about like open platforms to create vault strategies yet. We don't talk about like customization of input parameters and prompt engineering yet. But along those lines, I feel like there's so much opportunity here. It's super exciting. I don't know how to get exposure to this yet, but I'm craving for it.
I mean, we should save that for another episode. Maybe we can get the N of one team on the pod, but like in theory, it shouldn't be impossible to recreate that, because it's like you don't have to build the model, you just have to build the connection between the model and the wallet, and that's about it, I guess. But yeah, let's maybe move on to some other topics, because there's other stuff to discuss. I think one thing pretty dominant on the timeline is the MegaETH sale right now. So MegaETH essentially is like another low latency, high transaction speed blockchain, playing in a similar league as Monad so far. As with all of these launching, the existing ecosystem and the ecosystem at launch is somewhat debatable, but they also don't seem to be doing an airdrop as of now, but instead doing an ICO. And if we look at some of the past iterations of like yield bases or some of these like DeFi farming focused vaults, depositing or like participating straight in an ICO like model has been surrounded by much better sentiment than giving out airdrops to people who essentially have not done anything for their tokens. On that note, the main takeaway from last cycle would have been, when it came to farming or emissions token, is that you shouldn't buy what you can earn. And now it's kind of a vice versa. Like everything that you just earn, like debatable to what extent you deserved it, but you earned it in like the transactional sense. That has largely underperformed the things that you were able to buy in an ICO manner, and where you had more alignment between the people who actually wanted the underlying and who were willing to pay and who received it. So the way the sale works is you had the opportunity to do KYC on Sonar, which is associated with Echo, until I think 2 hours ago, and now you basically have to bid in an English auction fashion. So basically, you can bid between, I think, like 1 cent and 9.99 cents per token. So it caps the FTV at 1 billion or 999 million. Since it's an oversubscribed race, it's very obvious that everybody who wants to get in is going to bid at the maximum price. And the way they set it up is that they will give priority access to people who are like KOLs or somewhat influential or relevant to the MegaETH ecosystem. And then there are, I think, 5,000 spots reserved for the broader community, which supposedly also like get distributed on a like merit basis. So you are able to connect several wallets with a large DeFi history, connect some of your socials like your X or Twitter account. I'm not sure if you were able to connect your GitHub as well. But yeah, are you trying to participate in the MegaETH sale?
No.
Why not? It seems like pretty free money.
It's okay. So maybe for people who don't know what it is, I actually don't know what MegaETH is, other than they claim to be real-time Ethereum. So super fast, tons of like out transaction throughput and settling on Ethereum, right? It's essentially like I've seen this type of launch many times. And whether you call it EOS, whether you call it Tezos, whether you call it the Internet Protocol ICP, Definity, or whatever it was called, they all become irrelevant. I would put serious amount of money. Remember Blast, by the way? I would put serious amount of money into a bet with anyone that in 3 years from now, MegaETH is basically irrelevant.
I think most of the people
Yeah, so
participating in the sale would agree with you.
So what is kind of the point of the sale? It's a quick flip. It's a quick 2x, 3x type of flip. I don't know. I hope it runs.
A few times in a year where in this industry you basically have money lying on the street and you have to go and pick it up. I mean, of course, there is a remaining risk that you will get run over by a car while you're on the street picking up the money, but like it's lying there. It's very likely that it will trade at an FTV higher than $1 billion at launch.
Why is that the case?
Well, first of all, you have a lot of oversubscribed capital, so you have a lot of demand. So some extent of that will buy at launch. Then you have a pre-market on Hyperliquid, which I think is trading at like a 4 or 5 billion FTV.
That doesn't
let
mean
me
anything.
See if I can pull that up.
That doesn't mean anything. Like pre-markets are by now probably 10x. Like they're mispricing the assets up to 10x, maybe not as bad, but like at least at 2-3x. So honestly,
no. Why
here's my prediction.
Why should they be mispricing the asset?
Look at all the past pre-markets. I think most of them were completely wrong. I mean, I don't know. Maybe some of them were more accurate. I don't remember, for example, what the pump pre-market price was and whatnot. But honestly, like, if this thing trades between 1 and 4 or 5 million, I don't know. It's for me, it's like it's just not interesting to me. Like the technology is not interesting to me. I've heard that story multiple times. I don't know anyone who's building on it. I don't know anyone who's using it. I'm pretty sure it will be irrelevant in 3 years. So I find short-term investment just for a quick flip, for like a quick 2-3x, it's just not my type of play. I want to build conviction in an asset and then like DCA in long term. So, which is why if I would have conviction into MegaETH, I would literally wait for it to bottom at 80 million in a couple of years and then buy it up, right? So maybe the tech is amazing. It's just I don't see it. Like anything that is hyped for me is like stay away from it, other than like a quick flip. And quick flip only makes sense with size to me. Like, what am I going to quick flip 5K and then like make 5K or something? I would the tax overhead of that is probably more complicated than the 5K's worth. If I would have like a very large stablecoin stash, yeah, maybe I would deploy some of it here. Good point. But no, I'm not participating in it.
I think your outlook on focusing on high conviction bet it's honorable, but over the past 12 months, any single one of these conviction bets because you liked the underlying technology completely went towards the gutter.
You know what?
Everything has underperformed except for these ICO style things that were very quick flips, and you just wanted to get if you sold as soon as possible, then you were at a profit.
So whereas this is the thing.
Traditional, okay, we genuinely like the project and that's why we buy the token. Pretty much all of that has underperformed this year.
I actually think Do you have access to other pre-market charts where the market started trading again afterwards? Like, do you still see the pump pre-market, for example, which I think is comparable? I mean, it's not comparable at all because pump has actual revenue and products and whatnot. But like, do you see the pre-market price if you go?
Not sure if that was a pre-market.
But what I wanted to say is, I'm pretty sure it's a great shorting opportunity. And I'm generally not shorting stuff. I just like find it a little bit destructive and like playing in the financial markets is already like parasitic behavior to some extent. Shorting stuff for me is like, I don't know. But like if I would optimize on making money, I think okay, like obviously there's the risk of that happening, what you just showed us here. Of the thing going up a lot before it goes down again. I'm pretty sure eventually it will go down, but I may get liquidated if it goes up quite a bit before that, right? But again, don't have a ton of experience leverage, but I think shorting MegaETH over a long period of time without getting liquidated, which is probably the most difficult part, is the easiest bet. Like if it's trading, if it launches, gets a quick hype, maybe pumps to 4, 5, 6, 8 billion, then I may consider shorting because like again, why? Like who's using it? Why? It's just a quick flip. Everyone plays the same game.
Yeah, but I mean, your thesis is completely aligned, or at least not contradictory to most people participating in that ICO and the underlying thesis that they have. I mean, most people who are in the US and who would be faced with a 1-year lockup after TGE, they will not participate because a 1-year time horizon with these kind of assets is, I would say, risky to put it mildly. But most of the people just treat it as a quick flip. It's just a quick 1.5 to 2.5, whatever it may be, X. Maybe it's just a 1.1X, but even then, like, money is money. And at a 1 billion FDV,
sure.
it seems like very reasonable if you compare to the remaining FDVs of all the L2s, which are completely dead, with their token even more useless than the MegaETH token will be. So I think that, like, if you have a chance to get in, it's plus EV to participate.
Probably, yeah. Did you participate?
I signed up. I still have to like connect the wallet. The sale is going on for another 2 days and 21 hours now. So you basically have to register your bid. Obviously, if you want to get in, you have to bid at the max price because it's oversubscribed. And then, like, I mean, I've never had any significant touch points with the MegaETH ecosystem. What I've seen to be word on the streets is if you buy YTs, so yield token on Pendle of Cap Money, you might be able to get in because Cap Money is pretty aligned with MegaETH. I'm not sure if there was any cutoff date where they took a snapshot of the wallets that you additionally connected to your main depositor wallet, but apparently that's a way how some people got in. So since I'm bullish on Cap anyway, I'll probably just buy some Cap YTs on one of the wallets that I connected to the sale. Either it works out or it doesn't. Like I don't see Cap as like the YTs as a particularly risky play. On that note, if you want to take the other side of that, you could gamble on the implied yield of the Cap market on Pendle to be like completely be eaten up by people who ape into the YTs. So on the counter side, you could get very juicy PT yields over the coming 2 days potentially. Yeah, I haven't looked at Pendle and how that market is going to develop, but yeah, I think like given that there's not that much else to do in the markets right now, I think like these ICOs are kind of the best bet that you have right now. Besides a bit of stablecoin farming, but again, like if you don't have huge size, you cannot make a living off of that. And other than that, I mean, meme coins are all down the gutter. Like there's nobody in the trenches has any money left. They're all broke. I mean, you can perp trade if you have the skills for that, but other than that, there's nothing like super exciting. There's no dominant narrative. The selective alt outperformance is very randomly distributed. Like the whole Zcash thing is still showing relative strength, but nobody really knows why. I mean, of course, there's like the cabal bidding, yada yada, but like there's no like, why is it Zcash and not Monero or like Dash or
I
any
can
of the
answer
other
that.
privacy coins?
So let's talk about that for a second. I think this is all public knowledge, although it's not very explicit. But Zcash Foundation was done. Like Zcash Foundation was about to die, and Naval Ravikant basically blue chip CTO Zcash, and he started telling his investor friends and a group of people about this, and they all started buying it up. And there will be some integrations that are being built. So I'm not hating it, right? Like it's a fine thing to do. It's perfectly fine. So there will be an integration with a large messenger platform to use ZEC as the payment layer. There will be other large integrations. The foundation is being restructured. Like a new team at the foundation is taking over, and they're gonna basically, I think they're gonna do a much better job than the old people. So long story short, it's all positive. But historically, I don't want to reason by analogy, but I'm still gonna do it. If you see Zcash pump to 300, which happens every cycle once, that's pretty much the top, right? So it either changes this time and pumps to 1,000, or it will basically go down from here because everyone made 10x on size, and they will realize that 10x.
I mean, there are like 10 people in Zcash since the local bottom of 2 weeks ago. Like basically nobody won, and I think the whole like, yeah, the cycle is gonna top with that. That's such an obvious top signal. Well, if it happens in confluence with any other top cycle, top signals, and like,
yeah, I don't think it's top signal
peaking out. I mean, I think like it's, I think the most credible potential top signal that we have seen, at least for the broader altcoin market, was the Trump coin launch in January, because right around that there was still quite a bit of euphoria going on, and you had these kind of mini cycles of different narratives with the AI agents around Christmas and New Year's. Then you had the meme coins topping out with the Trump launch, and since then most altcoins have been bleeding pretty badly. I mean, again, like there have been selective outperformers, but it was very, very limited. And in terms of the broader market topping out, I mean, basically, like, everybody's at a loss. The only people who are selling at a profit are old BTC whales who are scaling out, which puts a bunch of selling pressure on BTC. But other than that, like I don't see any top signal on the horizon. I mean, in terms of the DATs, well, I mean, of course, it's like it's not behavior that you would see in the depths of a recession. Like it's somewhat frothy, of course, but like being able to raise from TradFi capital by like some financial engineering and offering them yields on debt instruments, like that is not crazy frothy. Like we've seen that in various iterations before. It is not like, I mean, it's not all the celebrities coming back. It is not like any new nation states coming in. Like all these top signals that where you'd really say, okay, now the stupid masses and the stupid money is coming into the industry. I think we are still far from that. It's like, I mean, I don't know if we are so blinded by just being in our bubble 24/7, but it seems so like, how can this be the top? Everybody seems to be poor. Everybody's broken.
So a couple of comments on that. One is, the more time passes, the more serious we have to consider about the traditional 4-year cycle being over, in the sense of the impact and the craziness of the 4-year cycle became irrelevant, in the sense of like, it's not a 20x anymore from bear to bull peak. It may be like a 3-4x or something, which is just like normal cycle of markets. The second thing is, I'm working on an analysis right now on the Solana network, which is basically showing that 98 to 99% of the people lose money. Why? Because the extractors are extremely professional in their tooling, in their bundling technology, in their marketing, in the way they run these projects. And do you know Axiom, the trading platform?
Yeah. I think it was the fastest Y Combinator startup to scale to 100 million in revenue or something.
So they have to keep growing, and there's some crazy things going on behind the scenes with regards to things happening with their contracts. Obviously, most likely not the Axiom team itself, but a lot of the crime, especially on Solana, happening goes through Axiom. And these teams have very professional tools, and people buy into these narratives and people buy into these metaphors, thinking, "Oh, like this is for the first time a real community that they haven't seen for a while or whatever." But no, it's like a rigged game. It's like, okay, I pay 2K to Dex, I pay 1K in fees for my 300 wallets. I pay maybe like $200 for marketing, X, whatever. And what is that? A total of like 5K in costs. And I'm going to extract 15 to 35K from this launch. And I repeat this 5 times a day. It's crazy. And I think this is the reason why everyone is poor. The reason why everyone is poor. So everyone was late to Bitcoin. So they were looking for alternative assets. That's why altcoins pumped. But altcoins didn't have the merit of Bitcoin. So they all died. It's the same with meme coins or any other asset, right? So the reason why everyone other than BTC whales or ETH whales, I mean, there's always exceptions like BTC, ETH, Solana, but the exceptions don't invalidate the rule. The rule is you're always late to everything, so you try to catch the next shiny thing. And most likely it isn't the next shiny thing. Most likely it's just another, like the odds are not in your favor. Let me put it this way. And that's why everyone is poor. So to come back to your point, this is not a top signal. I mean, there's a couple bombs this cycle which changed the whole dynamic. One is the amount of assets to invest in is just ridiculous at this point. Like, which of the 500 million assets should I pick to invest in? It's like, it just dilutes like crazy. Two, Trump is like, one day we have tariffs with China, the other day we're best friends. The markets seem crazy manipulated. He's like such an uncertainty bomb in the system that
he's super uncertain, but that doesn't have to necessarily kill the markets. Gold is still around its all-time highs. The stock market, I think yesterday or 2 days ago, or on Friday, made new all-time highs. Like both the S&P and the Nasdaq. Like everything else is running. It's just our industry is not running. So I think the industry internal issues right now, compared to the larger macro picture, are far outweighing macro conditions. Like, because despite Trump, despite all the geopolitical issues that we have in the world, the other asset classes are doing pretty well. It's just us not doing well.
No, but like look at can you pull up the crypto total market cap on your screen?
I'll see if I can put it up on.
Because if you bring up gold, then you have to compare it with that. Gold is literally like, what is there? Gold and silver. There's like 2 assets you can choose from. So obviously, like if you're going to invest in commodities or like precious metals, you have 2 things to pick, and if you want to ape into the main runner, into the alpha, that's gold. So that's the equivalent of BTC, and BTC I think is done quite well. So if you pull up the total market cap of crypto, we're probably very close to all-time high. So our industry, I think, is doing well in that regard.
We are at 3.8 trillion right now.
Can you do the chart on a do 1 or 5 years or something? I don't know. Yeah.
So the all-time high was early October, I think around the BTC all-time high. Mm-hmm. That was 4.1 trillion. Right before this year, we were at 3.73, so roughly where we are at right now. But basically, I mean, in April, and it's still, since BTCD is still very high. By the way, we had that bet going on for a few weeks about whether BTCD will drop below 40% until I think our deadline was the end of Q1 2026. So right now, it reached its bottom. So basically, like, the closest we've come to an alt season was September 13. That dropped down until 57%, and the high before was late June when BTC was leading the rally at 66%. So it dropped from 66 to 57, and now we are back at 59. But it's just like slowly creeping up. I don't think that we will make new highs on BTCD this cycle, unless the cycle truly is over. But yeah, it's still a very BTC dominated game. I think for ETH, it is important to acknowledge that like the outsized returns that ETH had over the course of a month or 2 months were like completely subsidized by Tom Lee and the DAT's raising. I think the brief catch-up of Sol that we've seen after that was also largely correlated with DAT's buying. So I think also for these sort of commodity-esque assets of the established L1s, namely ETH and Sol, it's hard to create a systemic bid for that, even though on a fundamental level, these networks are in a better position than they have ever been before. Like, we are finally at a stage where you have crypto credit cards being accessible. You have like vertical integrations of on-chain stuff into centralized exchanges, with Kraken partnering with Legion and Coinbase acquiring MegaETH ICO for 375 million. Like, there is stuff going on. All the banks are debating stablecoins. On a fundamental level, we are doing better than ever. But
I mean, look. One day we're up, 1 week we're up, 1 month we're up a bit, 6 months we're up a lot. So, year to date, yes, it's not great, but I think in general, that is the risk we take in this industry, is like, we acknowledge the fact that there's a lot of crime going on, which is why I would never touch perps in this market. It's a guaranteed way to lose money.
No, I'd heavily disagree with that. If you compare it to memes, I mean, memes are like 100x more crime than any perps. Like,
I'm not
perps
comparing
are,
it.
at the end of the day, a fair game. Of course, most people will lose money, but I think if you look at the fairness of the game and like the kind of unfairness of crime being committed, I think memes are way worse than that.
I'm not comparing it with memes at all. I think when it comes to memes, the human reasoning component and selecting the right memes is much more important. And it's just like, if you have a good intuition for that, you will do well. If you just ape into random pumped and funds, you will not do well. But like, look at the candle from Friday. I think this is the Friday candle, right? Like this giant red candle.
Yeah, the October 10 one. Yeah.
Yeah, whatever. Yeah, like, that is just, I mean, what the fuck is that? Like, for the first time ever, I have personal friends who've been affected and liquidated. And the only reason why they're still alive is because they were awake and they were able to catch a bit at the bottom and make some of their losses back with the retrace from pretty much the bottom to whatever it recovered to. So I don't know. I wouldn't feel, at the same time, I know people making 7 figures a week trading perps. So obviously it's also probably a skill issue, but in general, I wouldn't feel comfortable holding perp positions in this space right now.
Well, just a few minutes before, you were talking about how you're willing to invest in AI trading perps.
Yeah, AI is just, okay, that's a good point. But
same instrument with the same tail risks.
Definitely a good point.
I fully agree that like perps trading is a skill issue, and like, I'm not saying that I would have that skill, but I think like these people who are dogmatically opposed to leverage and like perps trading is evil, it's BS. It's an instrument, and like, if people don't know how to play the instrument, they should stay away from it.
But that's not how it goes in crypto. In crypto, there's so much manipulation that even if you know how the instrument works, like the second I would change my mind is when we have privacy preserving perps. When people don't know the size of positions that are being the size of leverage in the market, I think that will change the game. But as long as like market makers and whales and exchanges have insight into my position and they know exactly my liquidation price, I just don't trust them. And yes, you're right. It's a skill issue. And I probably would give more credit and more skill to LLMs than myself. But generally, because what do you want to do if you're in perps? You're only like the only thing that makes sense is in eternal long position. Like the only thing that makes sense to not get eaten up by fees is you either catch a flash crash like this, or you like consider a bear market the bottom and you start building a position and you're an eternal long.
No, like on perps, you get eaten by fees if you're long over a long period of time, because perps are usually non-biased, so the funding rates are positive.
For sure, but like if you look at the upside of long positions versus the upside for short positions, I think it's short position upside is much more capped, obviously.
Yeah, but I mean, it depends on the leverage, of course, and like that's why I think that leverage is a completely valid tool to use. It's just like leverage in of itself in like an isolated manner does not even matter. It only matters what's your equity at risk. Like if you set an isolated position with a clear stop loss, it doesn't matter how much leverage you have. Like all that matters is the capital at risk. That's why I think like the emotional attachment that people in this industry have to like either shorting or longing and like leverage versus spot, I think it's completely overblown. Like
probably
there are instruments that make more sense for either one, and you have to like look at the context to decide which one is better. But like there's no inherent evil in any of these things, because like with perp dexes on the DEX side, I think it's much fairer than on the centralized exchange side. I mean, there have been some allegations that on centralized exchanges, some of them have proprietary market makers or like directional teams that are trading against large users. So there you actually have an asymmetry in the rules that people are playing by. But on perp dexes, I think it is a fair game. And like, I mean, sorry, but if people don't know what auto deleveraging is and don't understand how it's work, then it's not due to the evil of like hyperliquid or anything. I mean, it's like
we have 5 more minutes. I have to run in 5 minutes, sir. I'd like to talk about one more thing. If you mind unsharing so I can share my screen. All right, I need to select the right window. Can you see my screen?
It's loading.
Do you see it?
It's still black for me.
I had this issue last time. Okay, can you open? I'll send you a link. Maybe you can share that real quick. I'll send it to you in the chat here. Can you go to github.com/coinbase/x402?
Can you send it to me?
Yes, I'll send it here in the chat. Bro, this window is all over the place. Give me one sec. Okay, now send it in the chat. And then scroll down. So once you open it, scroll down to the V1 protocol sequencing. I think that's the best explanation.
I don't see anything in the chat. Is it the studio chat or the live stream one?
Everyone. It says everyone. I can post it in the studio chat as well. I'll send it to you on.
Yeah, just do Signal.
Signal.
It's probably a drainer link anyway, to steal my remaining 1.5K that I have left in the industry.
Don't tell anyone.
One second. Let me pull it up.
You have to share your screen.
Which one is it? The README or?
No, just scroll down. Scroll down, 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 down. Yes, and then make that bigger, please. Okay, so what's going on? If you use the internet, you're using protocols behind the scenes. Those protocols are basically for machines to communicate with each other. Most common protocols that are known are HTTP, which is the hypertext transfer protocol, and then there's also stuff like TCP/IP, which is like layers below. And there's like different layers. If you think about the infrastructure, obviously at the bottom layer you have like physical cables, and at the top layers you have like applications built on top of these protocols. One of the most fundamental protocols of the internet is HTTP. And like if you're an engineer or if you're technical, you will know something like if you go to a website and the website accepts your request and delivers content, that's like an HTTP 200. Like the request is fine. A 200 generally means everything is good. Here is kind of what you requested, what you asked for. But sometimes you go on a website and you get a 404. I'm sure you've seen that.
Yeah,
and 404,
right.
Yeah, 404 is basically there's an error. There's some issue. Like you're not getting the content you requested. Why? Because it doesn't exist. There's much more codes, right? There's like permission is not allowed. Like you don't have permission to access this. There is something like you're rate limited. You've done too many requests. That's the 429. Like 429 means if you bombard a server with requests and they, I don't know, track your IP address, they will say, hey, like it's too much, chill. You have to wait for 5 minutes to be able to make another request. Or maybe like you have to wait for an hour or 24 hours. So there's all these like codes underneath our applications that define the rules of how we speak with each other on the internet, right? And that's called a protocol. And Coinbase and a few other people have been suggesting a new protocol, and it's called 402. And it's basically 402. So the 4 domain is access denied. Like you're not getting what you want, right? So it's basically, it means, hey, like you cannot access this piece of content. There's a payment required. And what you need to do is you need to specify your payment method, do the payment. For us, obviously, the easiest way of this to think of would be like a crypto transaction where you pay from an address and then you include the transaction hash. You put that into a header, you send it to the server, you say, here, now I've paid. The server verifies that. It can check, yes, the payment has been made. And I think the protocol is agnostic whether the payment happens in crypto or through other means. I mean, crypto obviously makes the most sense, but it's not like limited to Ethereum or Bitcoin or Base or Solana. It's agnostic as long as the verifier accepts your payment method. Then you do the payment. And once it's been verified that you've done the payment, the server basically returns what you've asked for. And the kind of like game-changing thing, I have to run in 1 minute. Like the game-changing thing here is that we're trying to embed this into a core internet protocol. And if that happens, I mean, more or less everyone will adopt this, right? Like this is something that could lead to mass adoption, because if it gets accepted by the committee and if it becomes a core code in the core internet protocol, that means that it's legitimate for every protocol, like for every application on top of HTTP to adopt and build on top of this protocol. So, you know, it's a simple technology, but it's like the perfect use case for crypto.
Sounds like good tech.
Good tech.
Right.
I have to run. We can discuss more next time.
Really enjoyed the session, though.
Likewise.
And yeah, see you in a few.
Ciao, ciao.